it depends what time horizon, right? Let's not worry about what happens in the first, week, 2 weeks, 3 weeks. But over time, I think of this as two different ways. Those of us have been in this space for a long time. It's like our IPO. We were seed investors in Bitcoin or Series A investors, Series B, Series C, and then eventually we get the IPO. But like the IPOs of the 90s, I think it usually does. They do pretty well, which is we'll see a lot of follow through. So I'm expecting, the same as everybody else, the kind of $50 billion over the course of the year. But there is no insanity like crypto insanity. As you know, Ran, is when things start happening, they lose their minds with FOMO and everything else.
While many argue that the approval of numerous spot Bitcoin ETFs was a positive development for Bitcoin and the entire cryptocurrency industry, some individuals contend that the hype surrounding the approvals may have been exaggerated. Last Thursday, the industry witnessed widespread excitement as Bloomberg analysts Eric Bolunas and James Cart reported substantial transaction volumes, indicating the newly approved ETFs were achieving billions of dollars in transactions, a success and a record-breaking moment for all exchange-traded funds. However, skepticism has arisen regarding the accuracy of these claims, given the continuous decline in Bitcoin prices since the launch. Despite reaching a 2-year high of $49,000 per coin on Thursday, Bitcoin has experienced a significant drop and is currently trading at $42,639.16. About 50% of the reported $2.3 billion in GBTC numbers were attributed to sales and outflows, mainly due to higher fees and the locking up of old Bitcoin. Consequently, the real numbers of new inflows were approximately zero. In a recent interview, Real Vision CEO Raoul provided his outlook on these developments and their implications for Bitcoin and the crypto market. Similar to other influential figures in the crypto community, Pal advocates patience and perseverance amid the price declines. The prominent macro guru also shared his perspective on other cryptocurrencies, such as Ethereum, and offered insights into the overall state of the US economy.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
There is no real precedent for a 70-volt asset that's in a roaring bull market coming to be available to every single person who owns a brokerage in the United States. So anything could happen. It could be a wild-ass bubble. I don't think it's going to be a damp squid. Look, they're all correlated anyway. They always were. They were correlated by the macro business cycle, and they always have been. So they are correlated assets, but the rebellious aspect of building a new financial system, you can either take it as, well, Gary's won and we've kind of put it inside Wall Street's walls, or we put the Trojan horse inside of Wall Street. I'll go with the latter.
Do you think that now the institutions are going, okay, we've got the Bitcoin ETF, and it's time to move on to the next one, which is logically going to get an ETF, and that's going to be ETH?
It's not the institutions, it's us lot. We're the people front running it. So we're going, okay, ETH next. Let's pile our money into ETH. And that's what's going on. And that will go. I mean, I think last time I came on the show, I said this is the next big trade, amongst the majors is this switch. And if I look at the chart pattern, it's this giant wedge over a period of time. In fact, we showed it on the show last time, this giant wedge pattern in the ETH Bitcoin cross on the monthly chart. Then, I use a lot of DMARC for my technical analysis. It gave daily, weekly, and very soon a monthly 9 count.
What do you think the probability is of an ETH ETF in the next 12 months?
Even the guys from Bloomberg who've been on top of all of this have said, listen, it's probably a 60-70% chance that will happen. Makes sense to me. Again, if you've got the two biggest assets, just think of Gary's mind, right? Gary Gensler. His mind is, let's get these behind Wall Street. Let's give Wall Street share of this. Let's get it into my jurisdiction. Then, of course, you want the second largest asset. The rest he'll probably leave to us for a while until we get a change of SEC or whatever. But he wants to make sure that they've kind of got the guardrails around the two big ones. So I think they want it. Despite
Bitcoin experiencing a 12% decline, Ethereum has surged by a nearly equivalent amount, with the leading altcoin currently trading at $2,534, reflecting an 11.55% increase over the past week. This notable shift in Ethereum's value is attributed to growing optimism surrounding the potential approval of an Ethereum ETF, a development expected possibly before the year concludes. Despite SEC Chair Gary Gensler's firm stance against approving another spot crypto ETF, Ethereum enthusiasts remain hopeful that the Commission might relent if legal pressures, similar to the Grayscale ruling, compel approval for such products. In the Grayscale ruling, which played a pivotal role in the approval of Bitcoin ETFs, The judge emphasized the inconsistency of denying spot ETFs when futures ETFs already exist. This legal precedent holds relevance for the potential approval of spot Ethereum ETFs. Notably, BlackRock CEO Larry Fink appears equally intrigued by spot Ethereum ETFs, mirroring his interest in Bitcoin ETFs. The ongoing speculation raises questions about whether Gensler will yield to external pressures after what could be another protracted and riveting battle. Share your thoughts and predictions in the comments below as we continue to provide additional insights from Raoul Pal's interview, this time focusing on his outlook on the US economy.
So this is global liquidity from all the major central banks, the Fed, the BOJ, the PBOC, the ECB, and the Bank of England. And basically, they were all withdrawing liquidity, but I noticed that liquidity had bottomed in year-on-year measures and other forms back in. It actually started bottoming in June, which got me into starting to rebuy Ethereum in the lows there, and then fully confirmed the bottom to me in my measures in October, November. So that's when I really kind of loaded up in technology and the full crypto. And for me, that these are forecastable, readable cycles based around the debt refi cycle. So for me, that's why I've got a more extended view before a downturn than Henrik has, because I don't see any reason why it won't just continue, generally speaking, till 2025, the end of this perfect cycles we've been having since 2008. So this is the Fed balance sheet in black, and the red is 36 months forward of the current interest payments. What that's telling you is the interest payments are set to explode or are exploding because of the COVID payments 36 months ago, the COVID debt. And what we found, this is the shorter term chart, using the longer term chart since they started QE, basically all QE has been monetizing past debt. So after the 4-year cycle, they just monetize the debt, shove it on the balance sheet, start again. So it's been this endless 4-year cycle based around this. And we've got this ridiculous phase to come where they can't really manage the interest payments without doing something. Right? You can't have rates at 5% or even 4% if you're looking at slightly longer, because the maths don't work, and they've got to keep issuing to pay all the interest of the 10 trillion or whatever they have to roll over the next year or two. So, you know, for me, that's the liquidity cycle, and you do that and assets go up because you're optically debasing the denominator, the currency. That's been my core thesis for this everything code cycle, is they've done the same thing every time. The economy slows down because rates have gone up and there's so much debt. So fine, the economy slows down a bit and they use it. It's the same time as the election cycle as well. It's all the same cycle. Bitcoin halving cycle, it's all the same time. They get interest rates down and they engineer some way of using the balance sheet. Who the hell knows how, what reason, but that's generally what they do. And that's why, you know, election years tend to be pretty good years, which is why this is why, and I'd love to hear your view, Henrik. That's why I still struggle to get bearish for 2025, because even if the economy slows in an election year, they'll just stimulate more. And that's the struggle I have, is that, you know, if you have a blow off top and some, you know, I've seen some of your stuff, like you could have a 1929 style thing. I'm like, I don't think you can, because they just print money and optically it debases the currency. So how do you get that?
According to Pal, there is still considerable hope, and the likelihood of navigating forward without significant repercussions for Americans and other countries with robust currencies remains high. Despite this, Pal emphasizes the continued importance and obligation of investing for those seeking to preserve and augment their wealth over time. While asset classes like bonds may not escalate rapidly enough to counter inflation, well-established stock indexes such as the S&P can assist in maintaining wealth without substantial growth. However, Pal underscores that cryptocurrencies remain the premier choice. In his view, only cryptocurrencies and technology stocks will persistently outperform the impact of currency debasement. He encourages viewers to share their thoughts on the video, seeking opinions on whether artificial intelligence and other rapidly evolving technological innovations offer a viable solution to the world's extensive debt challenges. Join the discussion by dropping your comments, thoughts, and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.